we have just talked about some typical situations that may affect the net realizable value of a firm's account receivable. Now let's look at, as accountants, how do we deal with it under each of the situation. So the first one is trade discount. How do we account for trade discount? So here's an example. Suppose I list a box of cupcake at $15, but sold it to Derek on account at 10% discount. So this is a trade discount. What journal entry should I make? So my journal entry is to debit accounts receivable, credit sales revenue. But the problem here is how much should I debit and credit in this journal entry? Should I debit and credit $15? No, it's not. So $15 is the listing price of this cupcake. But what I am going to receive, I'm going to receive $15 multiplied by 1 minus 10% discount. So that is $13.5. So this is the amount I should record in my journal entry. I should only record $13.5 because this $13.5, that is my net realizable value. So that is trade discount. Now let's look at cash discount. For cash discount, we have two methods to account for it. One is called gross method, the other is called net method. And let's first look at an example here. So if I sold 20,000 of cupcake on October 5th, 2016, with term of 2 out of 10 and out of 30. So the customer needs to pay me back within 30 days. But if they pay me back within 10 days, I will give them 2% discount. Customer paid $13,720 on October 14th. So this is within 10 days, and paid $6,000 on November 4th. So this is within 30 days, but out of 10 days. What are my journal entries on October 5th, October 14th, and November 4th? So without me going through the answer, please take 5 minutes. Try to think about it. What journal entry would you make? You can pause your video for now. So let me just write the first journal entry on October 5th now. And can you just look at those journal entries and tell me which one is the gross method, which one is the net method? So the first entry is, so I sold the cupcake for 20,000. So I debit account receivable 20,000 and credit sales revenue for 20,000. So this is the first way to make my journal entry. I sold it for 20,000 and I just do this. And then alternatively, I can make the journal entry debit account receivable for 19,600 and credit sales revenue for 19,600. Where does this 19,600 coming from? It is coming from 20,000 multiplied by 1 minus 2%. So which one do you think is the gross method and which one is the net method? The first one is the gross method. And the second one is the net method. So what are the differences in these two journal entries? We're implicitly making assumption here, right? So what are we assuming in the first journal entry? Are we assuming the customer is going to take this discount? So if you still remember, the discount was 2 out of 10 and out of 30. Are we assuming the customer is going to take the discount in the first in the gross method? We're assuming not. So we're assuming the customer won't take the discount. How about in the second journal entry, the net method? So where instead of using the gross 20,000, we're using a net number, net of the discount. So in the second method, are we assuming the customer is going to take the discount or not? We're assuming the customer will take the discount. So those are the two different ways to account for this. Both are okay. It's totally the firm's choice which one to use because the firm may make different assumptions. And then now let's move to October 14th. So on October 14th, customer paid back 13,720. Where is this 13,720 coming from? So the customer is paying back actually 14,000 out of this 20,000. But because the customer is paying back within 10 days, so we are giving it 2% discount. So the customer only needs to pay back 13,720. So what is my journal entry now? Under the gross method, we are assuming the customer won't take the discount. So what if the customer actually paid back early? So the customer takes the discount. So my journal entry now is I get cash 13,720 and I credit account receivable of 14,000 because this is for paying back 14,000 of my 20,000. And then the difference. So the difference is called sales discount, 280. And this sales discount, this is an income statement account. It is the contra account to my sales revenue account. So this is how we do it. We assume the customer won't take the discount. What if the customer takes the discount? Then we record it as sales discount, which is a contra account to our sales revenue. And how about if the firm has been using net method? So if the firm has assumed the customer will take the discount, and now the customer really takes the discount, then we just need to debit cash 13,720 and credit account receivable for 13,720, and that's it. And then on November 4th, the customer get back the rest 6,000. If the company has been using the gross method, assuming the customer won't take the discount. So my journal entry now is yes, for this 6,000, the customer didn't take the discount. So we just need to debit cash 6,000 and credit account receivable for 6,000. What if we have assumed the customer will take the discount, and now for this 6,000, the customer didn't take the discount? So now my journal entry should be debit cash 6,000, credit account receivable for 5,880, and this is 6,000 multiplied by 1 minus 2%. And then the rest of those, that is called sales discount forfeited 120. So this is this sales discount forfeited account. It is also an income statement account, and this account adds up to our sales revenue. So different from sales discount, which takes away from our sales revenue, sales discount forfeited, it adds to our sales revenue account. So this is how we account for our cash discount using the two methods, gross method and the net method. And if we compare these two methods, so again, under the gross method, the assumption here is customer will not take the discount. And what if the customer take the discount? We debit sales discount, which is a contra account to sales revenue. And under the net method, we are making the assumption here the customer will take the discount. And what if customer do not take the discount? We credit sales discount forfeited. So after we have gone through this example, now let's look at a practice of cash discount. Nico sold 100 boxes of chocolate to Yuan for 20 each. The term of the sale were 10 out of 10 and out of 60. Yuan paid 450 on August 7th and paid 1,500 on September 20th. So please give me the journal entry at August 1st, August 7th, September the 20th, under the gross method and the net method. Please take 5 minutes, try to work on this example on your own, and you can pause your video for now. So how do we do this example? The sales occur in August 1st. So Nico sold 100 boxes of chocolate to me for 20 each. So in other words, the total sales is 100 multiplied by 20, so that's 2,000. And then on August 7th, I get 450. On September 20th, I get the rest 1,500. And the term of this sales is 10 out of 10 and out of 60. So this 450, it is paid within 10 days. That's why I'm giving 10% discount. So this is for paying back 500 and multiply by 1 minus 10%. So the customer only needs to pay back me 450. So under the gross method, what is my journal entry on August 1st? Debit account receivable, I just need to debit the gross amount, 2,000. Credit sales revenue for 2,000. And what if the customer pay back early? So I get cash 450 and I credit account receivable because this is for paying back 500. And then I need to give sales discount 50. Sorry, let me write it again. And then on September 20th, so on September 20th, I received the rest 1,500. So I debit cash 1,500 and credit account receivable for 1,500. So this is the gross method. And how about under the net method? Under the net method, my original assumption is the customer will take the discount. So I debit account receivable for 2,000 multiplied by 1 minus 10% discount. So that is 1,800 and credit sales revenue 1,800. So this is net method. And then on August 7th, so the customer paid back 450 and the customer did take the discount. So I debit cash 450 and credit account receivable 450. And then on September 20th, for this 1,500, the customer didn't take the discount. And my journal entry is to debit cash for 1,500. Credit account receivable for 1,350. So this 1,500, 350, this is 1,500 multiplied by 1 minus 10%. So this is 1,350. This is the equal to 1,800 minus 450. That is 1,350. Or you can calculate it as 1,500 multiplied by 1 minus 10%. So this is the original account receivable I recorded, which assumes the customer take the discount. And now the customer didn't take the discount for this one. So I'm actually getting more cash than I expected. And the rest of this is called sales discount forfeited. So that is 150.